Part of practical applications, I approached one of my friend. He has 15,000 as a monthly home expenses. Retirement age his targeting was 58 years. His wife's age was 28 and she's not working, and life expectancy was 80 years. Okay. The inflation he was considering around 8%. I mean, he was aware of the inflation of a medical and education inflation. So he considered it as an. So 15,000 of today's at the age of 30 will become 1,02,000 at the age of 58. Like his wife will be living for 27 years, and for 27 years they need to draw the 1 lakh rupees per month for next 27 years. The present value, like what is the corpus they require at the age of 53 of his wife. So it turned out to be 3 crore 70 lakhs and 21,000 rupees. Okay. So when I presented this value to him, he was pretty shocked.
That is the job of certified financial planner, when you sit with your potential client and calculate inflation adjusted corpus and educate how this corpus is arrived. And that's how client will come in for long-term savings. Otherwise, we have seen that why people are not saving for long-term, because they have just invested into mutual fund or direct equity for the return. So if they get a return within 1 or 2 years, they will withdraw. If they don't get, they will withdraw, and then they spend the money or buy some lifestyle product and services.
And then we move ahead and wanted to find out if he want to start an investment from today, so how he'll be moving ahead. So if we go with the 6% instrument, which is providing, 6% rate of return, so he have to start with the 55,000 or 55,600 rupees investment from now for next 25 years monthly investment. If you go with the 8%, that's 41,000 around, and with 10%, 30,000, and 12% is 22,000. So these are the different scenarios which I presented to him. Like if you go with the FD or if you do the RD, you have to go with the 55,000. And if you are into the mutual funds, you can, if you are expecting 12% return, then you have to start with the 22,000.
Good. And when your goal is long term, definitely you can think of 10% return by combining the right allocation of debt and equity strategy.
And this is the standard plan which I created. 6% is the standard inflation. So you are also correct and I am also correct. So if you want to go with the 6% inflation, then the retirement corpus will be 1 crore 85 lakhs. And you are also correct, because we are not considering lifestyle inflation. So you could be having your lifestyle inflation, like you are now traveling on a bike, you may be traveling in a car, then you will be buying your own car, then you are upgrading your car. So this kind of thing is a lifestyle inflation, so which we have to consider, and it's a good thing you have already considered at 8%, and at 6% our retirement corpus is 1 crore 85 lakhs. So we can, if he delays his investment for 5 years, so if he procrastinate of doing an investment or delay his investment for 38 years, so he have to do the 20,000 investment per month. So earlier it was around 10,000 considering 12% return. And if we delay 5 years more, around 43 he plans for an investment, then it's 38,000. If we go at a 48 years, want to invest for retirement, then it's 82,000. So this is the cost of procrastination, that he have to pump in a lot of money or lot more money to achieve his retirement corpus.
Good, very good. So it is a cost of delay where on average every 5 years your cost of doing a SIP is getting doubled.
When you start the SIP, we have some certain asset allocation in the mind, and we'll go with that asset allocation. We'll not take the inflation risk, we'll not take the market risk, we'll take a calculated risk. Like if you going to invest 100 rupees, what we'll do, we'll invest 60 rupees in equity and 40 rupees in a debt fund. And we'll try to rebalance it on a yearly basis. This is the asset allocation which I decided for him. And after 7 years, we rebalance it to 50-50%. At 46, we rebalance it to 40-60. At 53, at 52, we rebalance it to 30 and 70. So 30% in equity will be invested for 18 years for his last bucket. So that will be residing here. By devising the strategy, what I did, I reduced your risk. We are now generating 8.73% return, which is a gamma return. We don't have to take the inflation risk and we don't have to take the market risk. So it's just a balanced approach.
Good, very good, excellent. So that is the power of qualified and experienced certified financial planner, who can not only prepare the basic or standard retirement plan, but who can help to construct the post-retirement advanced asset allocation rebalance strategy to optimize the risk and optimize return. He can help you to plan the pre-retirement advanced asset allocation and rebalance strategy to optimize risk and return. So that is the reason we are investing our time, and we are eligible to charge the fee for our investing time.
So we considered the 5% growth per yearly in his SIP value. So his SIP was reduced from 14,000 to 9,000.
50% SIP is reduced from 14,000 to 9,000. Good, very good. And that is again easy for client, because client is normally income is expected to increase at 5 to 7% or at least rate of inflation. Okay, so if you can increase your investment as per your income growth or your as per the inflation, you can create a big corpus over a period of time.
When you start with 100 rupees, next year you will be doing 105 rupees and so on. You will be continuing your SIP for 25 years. So if you start with 100 rupees now, it will be 322 rupees at the last year. So this is the increasing SIP.
Good, excellent, excellent. You have prepared the financial plan.
Another need-based goal he was having in mind of a higher education of his child. So he wasn't really sure about what amount to target. So I said, let's target it at 3 lakhs when you take an admission, then 1.5 lakhs for next 4 years. Of 2 days will turn into around 7 lakhs when your child will be of 18 years of age. After 11 years, 1.5 lakhs will be 3.77 thousand after 12 years. At the age of 43, the corpus which you require for your child's education will be around 21 lakhs 31,000. What is the SIP requirement? With the 6%, it was around 11,500, with 8%, 10,000, 10%, 9,000, and with 12%, 8,000. And again, I helped him with the asset allocation strategy, as in he was aware about the different risk on different instruments. So we again devised the asset allocation strategy here with a rebalancing, you could say 10% reduction in last phase. I mean, when child turned into 13, we reduce our equity exposure by 10%. So from 13 years, 40% was in equity. Then we moved 30% at age of 14. Then when the child is 15 years, then we move to 20. When 60, we move 10% only in equity. And at the age of 17, we took out whole amount and secured it in the debt instruments. So when his child really required the higher education amount, we don't have any market risk on it.
Good, excellent.
If you go in a market, you don't have a retirement loan for you. But if you go in a market, ask for an education loan, you'll get it. So you have to prioritize your retirement first. Then your child education. Yes, it is also important, because once you get the education, you will be getting a better job. So that is also important. And now marriage, if you talk about the marriage in lockdown, we have only, we have to limit our attendees to 50. So I said 10 lakhs you are considering, but you can do that marriage in half an amount. You can do it in 5 lakhs also. And buying the gold is not your need. It's just an aspiration. You are already residing in your own house, and you are thinking it as an investment perspective. So it's not a good thing. You'll be taking additional loan and you'll be taking liabilities on you. So that is not required at the moment. And you have to continue with your retirement and your child education first.
Good, very good. So congratulations for making a superb financial wellness plan. And I knew it from well beginning that your handwriting is excellent. So when you prepare a financial wellness plan and share it, side investor feel your hard work. Okay, that how much time you have invested in terms of qualitative thought process, in terms of documenting the need and wants of client, converting into the inflation adjusted corpus, converting into the various advanced asset allocation and rebalance strategy. So that's the beauty and benefit of the handwritten financial wellness plan, because when you prepare 10 page, okay, people can feel your hard work. But let's move towards conclusion. So as you have completed 3 exams, and I'm sure that by March 2021, you will complete your CFP certification, most probably your 4th exam in January. Okay, first week of January as we decided, and your 5th exam in first week of March. Okay, So what is your future plan when you see yourself down the line 3 years, 5 years?
I want to influence the 100 families about the financial wellness. What is financial wellness? Then the products are secondary. The wellness is primary.
Someone says that I want to start a 5,000 SIP, or I want to buy a one term life plan of 50 lakh rupees, or I want to buy a 5 lakh rupees mediclaim policy. Okay, why don't you basically execute the transaction? I'll not do a transaction based services to you. You can go and do it from anywhere. Construct your financial wellness plan. It could be a 5-page, it could be a 20-page based on the client needs and want. Okay, goal-based financial planning is there. And then if it is backed by this, we give the proper solution of basket of product, whether it is a term life, health insurance, or mutual fund, or recurring deposit, or PPF account, then client is going to commit for a longer period of time. Otherwise, chances that within 6 months, you realize that a client has discontinued the SIP, client has not paid the second renewal premium of health insurance. Okay, because today client is in most investors are in panic and they are buying the health insurance. Once everything is going to be normal, example, in next 1 or 2 years, chances that they will lapse their policies because they have not understood the long-term benefit of their investment and not committed to the goal.
Case study which we discussed, this guy don't have a life insurance. So when I calculated his insurance corpus, it was around 1.5 crore, 1.50 crore. So I asked him, he insisted me to review his portfolio. I said, no, I will not be doing this. Create a contingency fund, have a life insurance in place. Then only we can review your investment. Otherwise, as I mentioned, you are building your story from the second floor. But I want to start with the, building your pyramid from the ground level.
And that is the thought process we have to impart to our client, because when we go to a doctor, when we go to a professional like chartered accountant, lawyer, then we don't say that you do this way or that way. We suggest our problem and then they basically understand your problem in detail and provide the solution, and you have to follow that solution. So same way, until we don't believe ourselves that we are financial wellness doctor, and until we do not have done a proper diagnosis, we will not sell a product. Okay, chances that 10 out of 2-3 clients you lose. But this is a good in a long term. Short term, you may have a few thousand rupees distribution income loss, but in long term, I can say that those clients, those investors who have followed your thought process, chances that they will commit for a long period of time, as well as they will commit more amount of per month because they have realized the need of savings for their retirement or children higher education or vacation, etc. Second, even they will refer to you, because end of the day, we are in business of wellness. And one important message you are like to give to the investor community, maybe investor could be your friend, colleague, relative, or potential clients.
Talk about the IT, we are so busy learning about the new technology, our new products, and we lose interest on the finance, or we don't have enough time to concentrate on the finance. So I'll suggest them to seek a professional advice. And if you don't want a professional advice, if you want to do DIY, then you have to learn from somewhere. If you want to start your investment, you have to clear your base first. You have to have emergency fund, you have to have insurance in place, and then you can build your short-term, long-term, medium-term goals, and you can create a wealth. Colleague who again fall in a trap of his advisor who sold him a ULIP product. So yeah, these things are happening if you don't have a goal in mind. So I would suggest to consult professional. If you want to do it DIY, learn it from the professional. So yes, take a help. Don't hesitate for it.
Good. So message is loud and clear. There are two options for a young professional. Omkar is IT professional, so I'm discussing from the IT professional perspective. So one, either you appoint the qualified and experienced certified financial planner like Omkar ji and construct your financial plan and execute with help them, or someone 1 out of 10 may have a thought process of learning. Okay, then they need to do some training where you offer the live recorded lectures or live lectures, online lectures, which is an option available. And once you learn and once you find the confidence, then you can do it as a professional DIY investor. But without the professional help, or without being a professional, if you start doing the investment in direct equity or mutual fund, chances that you end up with the lower return or maybe a capital loss also. Thank you very much, Omkarji, on a short notice on a Sunday evening, you decided to participate in digital meeting for the benefit of your investors and also CAP aspirants. So once again, I thank you very much for joining your honest story, and I'm sure that this honest success story will inspire many young professionals, those who are in IT or non-IT, to think about learning the personal finance as a part of their professional career or personal life. And I'm sure that you will also, once you complete the CFA certification, you will able to help and achieve the 100 families target in next 2 to 3 years. So thank you very